Hey everyone, and welcome back to a brand new video. One of the coaches at Unga Academy here, and this is our usual chat that we have every weekend about the market trends. However, before we start to see what has been happening over the past 5 days, I invite you to please subscribe to our channel and leave us a like to this video. And of course, go and click on the notification bell too. We would really appreciate it. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. So we can say that it was all in all a good week for the markets because we saw a rebound in equity indexes and a concomitant rebound in bonds, a decline in commodities, which we know have been weighing on inflation, and a slight rebound for cryptocurrencies as well. But let's go in order. So let's start with the stock indexes. Now, this past week, we saw a rebound in the US stock indexes with a positive 5.7% for the Nasdaq and a positive 4.7% for the E-mini SP 500. The European stock exchanges, which nevertheless rebounded, at least partially, performed less well, especially the DAX, whose 5-day returns are still negative. Anyway, this was a good bounce from the lows, which we haven't seen in quite some time. Long-term volatility remains pretty high, but short-term volatility is going down, and we can see this on the mini SP 500 as well. The volatility over the past month is significantly lower than the peaks we have seen recently in the stock indexes. Well, as I was telling you, this week, along with the rebound in equity indexes, we also saw a rebound in bonds. In particular, we saw a nice rebound in the European Bund, up 2.12%. US bonds also went up 1.6% for the T-bond and 1.2% for the US 10-year bond. On the other hand, as far as energy markets and commodities in general are concerned, we did see some declines, well, pretty much everywhere. This, as we said, was good because prices, especially in the energy sector, have been weighing heavily on inflation and consequently on the Fed's aggressive interest rate policy. Natural gas went down 10%. So we had a decent drop for natural gas, which was on really important extremes. The same applies to the metals sector, which, as we've been saying for several weeks now, is one of the weakest sectors, and this week it continued in its bearish trend. On the other hand, as far as soft commodities are concerned, we saw a very important downtrend in cotton, which until not too long ago was in a strong uptrend. Here we can see it better over the long term. So the cotton uptrend and the recent downtrend. Turning to grains, we saw very significant declines here as well, particularly in wheat, a commodity that is certainly affected by the conflict between Russia and Ukraine, losing almost 12% this week. Also saw some major declines on soybean oil and the hard red winter wheat. In terms of currencies, we saw a rebound of the euro against the US dollar, quite modest, the current value 1.06. Finally, a small rebound for cryptocurrencies as well. Yay, up 3.7%. In the last weekend, Bitcoin touched values below $20,000. If I remember correctly, they were around $17,500. And so it was a nice rebound, although you can't see it from this chart because the CME futures are closed over the weekend. Turning now to an analysis of volatility. It remained generally high in all markets, and I'm referring to the long-term trend. This is a phase of the market where volatility takes over, although in the last month we've seen a slight drop in volatility, also thanks to the rebound in stocks and bonds that took place this week. If we go and take a look instead at implied volatility, so let's say measured either by the VIX index or the other volatility indexes on the SP 500, we notice a rather peculiar structure, somewhat mixed, if you will. We are neither in contango nor in backwardation. So this is a volatility term structure that denotes some uncertainty about market performance, as is normal at this stage. Look, overall, VIX is still at fairly high levels, but not at panic levels. So just keep in mind that the situation in the markets could evolve very quickly. Now let's take a look at the rollovers for next week. As you can see, there are quite a few, all on the 27th as a recommended date. We've got corn, soybeans and their derivatives, and wheat. Then we have the energy futures, heating oil and gasoline, and finally the metals, copper, platinum, and silver. All right, guys, before we say goodbye, I'd like to remind you that if you're interested in systematic trading, well, you have a resource at your disposal. I'll leave you a link in the description of this video. It's a free presentation by Andrea Unger, who will introduce you to his trading method, which has enabled him to win the World Cup Championships in real money trading 4 times. Yeah. And by clicking on the link, you'll also get, by covering only the shipping costs, the bestseller, the Unger method, and much more. So please do yourselves a favor, go check it out. All right, guys, and that's it for this week as well. I ask you to leave a like if you like the video and invite you to subscribe to our channel if you haven't already done so. And with that, we'll see you again next week. Have a fantastic weekend. Bye-bye.